Well, hello and welcome to Business Incorporated Live on Channels Television. Let's see how the markets are doing, but here are the stories coming up. Well, Central Bank has held its interest rate steady for a second consecutive meeting. What does this mean for investors? We'll find out. And South Africa's inflation has accelerated more than expected, strengthening the case for another interest rate hike. And investors turn their attention on Wall Street as fresh round of big tech earnings that's on the way. And it's great to have you join us. I'm Ladi Williams. Let's kick off now what's playing out with major commodities that we track now. We're seeing for the metals market, copper, that's the lone laggard right there, down 0.63%. That we see spot gold 1.12% higher. That's basically what's happening with geopolitics there, with the war in Iran. They're escalating 1.86% higher for palladium. Platinum 1.12%. And we see spot silver still around the 50s region at this point. 59.63 up 0.89%. So we see the safe haven trade there happening. That's for the metals market. Let's get a check on what's playing out with oil now. Definitely we're watching oil prices, and that's been rising, but this time also rising with metals there, rising with gold. Brent crude, $94.22, 3.35% higher. It's a 6-week high that was hit today. And, investors are monitoring what's happening in the Middle East there. Supply concerns at this point now, getting in. Before now, oil markets were not responding to hostilities, but it's responding heavy now. 87.77, that's for WTI crude, up 3.38%. So that's the color right there for the oil market. We'll keep tracking that to see how investors continue to react. Let's get on to other stories now. The market. So we see African Energy Bank there. They're set to begin operations September 21st. The African Energy Bank, definitely investors looking out for that. And it was a fierce bidding war there that Ghana actually won, and that was made known at a conference by the Nigerian Institute of Advanced Legal Studies that focuses on international law, diplomacy and finance in Abuja. Our correspondent Emanuela Ekele reports.
Consumer inflation.
Try and get that when it's ready. But let's move on to other stories now. We see Kenyan budget deficit that seemed to narrow to about 3.6% of GDP in 2027-2028 fiscal year, signaling a strong push towards fiscal consolidation as the government seeks to rein in borrowing and stabilize public finances. The latest outlook comes amid ongoing efforts to boost revenue, manage debts, and sustain economic growth in East Africa's largest economy. All right, let's move on to Southern Africa now. See, South Africans are paying more to get around, and that's pushing the cost of living higher. Consumer inflation accelerated to 5% in June, up from 4.5% in May. That's the highest annual reading since June last year. The increase was driven mainly by a sharp rise in transport costs. Fuel price surge by more than 34% over the past year, triggering higher taxi fares, bus fares, e-hailing costs, and school transport. Fixed income and currency researcher Standard Bank South Africa, Elna Moolman, shares her perspective on this.
Consumer inflation increased significantly in June to 5% on a year-on-year basis from 4.5% in May. This was still largely reflective of the direct impact of the Iran war, with fuel prices rising significantly and various components of the public transport category of the inflation basket also rising quite significantly. This is a dilemma for the Reserve Bank, given that inflation is well above its 3% inflation target and given that inflation is likely to continue exceeding its inflation target in the coming months. We therefore expect the MPC to be quite divided at this week's meeting. It may very well then decide to hike interest rates further, but this should be the peak in their hiking cycle, and we still think that as soon as the war is over and oil prices sustainably lower, the Reserve Bank should start unwinding these rate hikes and cut rates even further to a terminal rate of 6%.
All right there, investors watching out for what's playing out with energy prices, and definitely that's going to impact inflation going forward. But as South Africa grapples with, declining voter turnout, and growing public distrust in democratic institutions, delegates attending the IEC Thought Leadership Seminar in Pretoria, they say, restoring public confidence must go hand in hand with inclusive economic growth. They argue that the government needs to prioritize investment in infrastructure to unlock private sector investment, create jobs, and address the economic challenges driving voter disengagement.
Definitely. Definitely. Look at how the economy has been stagnating. We should be, as South Africa, be growing at 5% or more, but we're not even getting to 1%. And that is now a worrying thing, because it then says that with inflation and the population growth that is there, we're not really meeting it with the economic growth that is supposed to be. So we have a deficit that really, if we not do anything to change, we're gonna be sitting with a bigger problem in years to come. And this is something that has to change as a matter of urgency.
The commission itself and the kind of work that it does in, firstly, promoting operational efficiency at voting stations and engaging with the voting age public countrywide. That's what it can do, is understand the science of patterns that the data is showing, and use that to promote and have discussions about why, even in today where there's greater skepticism about the way democracy is performing, about institutions as well, they are functioning. Even in that more critical time, they are advocating for use the democratic right you've been given.
All right, let's move on to our first conversation now. Yesterday we did get the July MPC decision determining the cost of borrowing in Nigeria. But let's see how some markets have reacted to that. The trading day right after that decision. Let's see what's happened so far. Joining me now is Chukan Wachukwu, Chief Dealer, Group Head of Trading at UBA Group. Great to have you on the show, sir.
Thank you, Laddie.
So definitely, this was expected, another whole decision. It's happened now. It almost feels like maybe there's no change, for the markets.
Rightly so. Recall my last interview here, I did mention that MPC market expect MPC to hold rate. This is because of some of these parameters, especially the inflation. We saw inflation figure came out just about marginally about 2 basis points from 15.93 to 15.91. Also, another factor is that economic GDP growth. We saw it, around within 3.77 levels, and then of course global risk, the war between Iran and the US, and so I think MPC just took all these things into consideration, and I said, look, you know what, I think it's best to hold now. It is better to just watch the market and then leave all parameters the way it is, pending when some of these items that I mentioned, or some of these factors that I mentioned, will improve.
So do you think this is the last hold before maybe a possible rate cut?
Not necessarily. We still have about 2 MPC meetings. I should also feel that the next MPC meeting, CBN will still maintain. But again, towards the last MCPC meeting, I believe there will probably be a rate cut. So I don't think that there won't be much changes between this MPC meeting and the next one. I think that CBN will just hold on, monitor all these parameters. Of course, the external reserve is doing well, but it's not the comfort zone where the CBN wants it to be. As well as inflation. Like I said earlier, inflation has gradually eased just slightly about 2 basis points. Prior to this last week inflation figure, we saw inflation move about 15%. 15.3% to about 15.93%. And so all these factors, will determine what will happen in the next going to the last to MPC of the year. But I think that the next one, CBN will still maintain.
I'm guessing since there was no change, from the last meeting, I guess maybe we wouldn't expect any change when it comes to, treasury bills and FGN bond yields, investors that, like to lend money, to the government or to companies.
Yeah, you're absolutely right. The market remains stable due to the fact that market has also already priced in the CBN decision. So we've seen treasury bills 1 year trading around the 17% levels. The bond, there was a bond auction on Monday, and then the longest tenure, which is at 2037, trading around the 18.2 levels. So nothing really has changed, though the market is quite liquid. We've seen yield continue to decline due to the system liquidity, which is quite robust. So we just continue to see things play around within this range. There hasn't been much reaction from the market as regard the MPC decision due to the fact the market has already priced it in.
So, definitely, I know the governor also spoke about, interbank lending rates and NOFA. How would this, impact banks, when it comes to adjusting, lending and deposit rates and, banks that, lend money between each other?
Yeah, I mean, you're talking about interbank market.
Right.
It's really not, like I said earlier, what affects the fixed income market as regard the MPC decision is also affecting the money market. And so we've seen the yield, you've seen the rates within that SDS level at 22%. Like I mentioned earlier, market is still highly liquid due to the OMO maturity, NTB maturity, as well as a coupon payment. Fact just came in, so that obviously will bring in another about 1.92 trillion into the system. So market has been constantly been liquid, and that's why we've seen it, the activities on the fixed income market, being bullish, because some of this liquidity, the investors obviously need to reinvest them into the fixed income space. And so this hasn't the MPC decision hasn't really had any effect on both the fixed income market and the money market as at now.
Right. So how should corporate treasurers and retail investors, do they need to reposition their portfolios or just maintain status quo?
So, like I said earlier, we expect a rate cut at the last MPC, and so as a trader, as an investor, I think that is now is the best time is now for you to lock in your investment, especially the T-bills and the bonds. We have the yield trading around 18%, like I said earlier. So if this expectation is what we expect, then I expect that people should just buy be bullish on the security, knowing fully well that towards the end of the year there will be a rate cut. So if fixed income security yields are trading around 18%, obviously once there's a rate cut, we see almost like 200 basis point drop or 300 basis point drop to around 16 or 15%. So I think this is the right time for investors to lock in and then wait for the end of the year.
All right. I guess enjoy the yields while they're still high, before the cuts come in. Thank you so much, Chuka Nwachukwu, as the Chief Dealer Group Head of Trading at UBA Group. Thank you so much, sir.
Thank you, Ladi. Thank you very much.
Well, let's get a check on other markets. At this point, we know the NGX still, rallying on at this point, and there's also the banks, taking the market higher. Now, we're also seeing the banks also taking the NGX all-share index, higher today. The likes of Firstholdco again is back in the news. 5 trillion market cap. That was hit. Now it's definitely the most capitalized there out of the Fugas. Share price intraday was around 112 to 113 naira. Did see it at 110 naira at some point. Previous close 105 naira per share. Market reaction is showing strong, buying interest right there for that stock. We also did see MTN Nigeria also add to its share price today, and investors are looking out for all of those H1 earnings at this point, driving sentiment. EGX30 is down 0.28%, and the Nairobi Stock Exchange closing about 0.40% lower in the previous trade. Let's flip over to other parts now. We see Gulf stocks, they did the dip today in early trading. Investors are weighing the escalating, tensions there. That when it comes to the Middle East conflict after U.S. forces struck Iranian military targets for the 11th consecutive night. So we're seeing the markets reacting to that. The UAE, flip over to other parts there. We see the Tadawul, that's the lone gainer there, 0.35% higher than the Qatari index, down 0.40% there, also with the pressure on the Middle East impacting it. Therefore, stock futures in the U.S., they were seen mostly red, giving us direction on what to expect there. 0.59 lower, 29,144 points. Then, investors are looking out for, big tech earnings coming out today. The likes of Google, that's Alphabet, and Tesla. We're expecting those earnings today. Let's see what investors should be looking out for when it comes to Alphabet's earnings. Can you put that up for me? Revenue, they're expecting revenue to be about $117 billion. That's the expectation right there from the market. Earnings per share, about $2.87 to about $2.90. Then they also expect Google Cloud growth to be around 63% higher. That's comparing year on year. CapEx, that's one investors are looking at this point. All of that AI, spending, they're wondering what is this company going to make from it. So any increase above 180 to 190 billion dollars, that's annual guidance. That's what they're expecting when it comes to CapEx right there. When it comes to spending on AI. Then for the Asia market, we see the Kospi there managing to close in the green, 0.74% higher. Flip over to other parts of Asia. Now, we see for the Nifty 50, it's down big, 0.79%, losing that 24,000 level after losing the 25K level. Shanghai Composite, 0.07%. So that's the color right there for Asia markets. All right. Let's get a check on the story there when it comes to the Energy Bank in Africa. That was launched recently. You can take a listen.
Diplomats and international lawyers, organized by the Nigerian branch of the International Law Association and the Nigerian Institute of Advanced Legal Studies.
Energy Bank. So I want to learn more.
International diplomacy is a fast-changing concept, and countries devise key ways to come out tops where other countries are in the picture.
Under established norms and rules.
One area Nigeria recently secured big diplomatic points is winning the bid to have the Africa Energy Bank headquartered in the country after overcoming neighbors Ghana.
Nigeria contributed the most financial resources for the establishment of the bank. I think at that time we had contributed over 150 million. Ghana 20 million, Angola 20 million, Cote d'Ivoire just last month or 3 months ago contributed 20 million, and you're competing for a space with us for the establishment of the bank. It was not until recently that they acknowledged that, yes, Nigeria really deserved to host the Africa Energy Bank.
Nigeria needs to re-strategize its style of diplomacy to its economic advantage.
Just a point of view.
You don't always get what you deserve. You get what you negotiate. So we need highly skilled negotiators, those versed with the knowledge of international law that can negotiate win-win trade and investment opportunities and bring them back home. So that's why we're having this course to train the next generation of diplomats and international law experts that will be at the forefront of ensuring that Nigeria's interest is well represented at the international level.
At the end of the conference, the take-home for these legal practitioners is that Nigeria must begin to build diplomatic relations that attract investments, and this meeting is considered a step in that direction. Emanuela Ekele, Channels Television News.
All right, let's find out what's happening in Europe now. We have Lars Holter right there. Great to have you, Lars. How are the markets looking this trading day?
Yeah, hi, Lottie. It's good to be with you. We are up on Wednesday. Actually, most markets here in Europe up about 0.5%. Frankfurt doing a little weaker, maybe up 0.2% right now. However, some analysts and some investors are expecting sharper moves over the next few days because, of course, of two important factors. One, the higher oil price, which we've been dealing with for a while now, but then it's also earnings season, and I'm pretty sure you had that earlier in the show, looking especially at the U.S. stocks, because, of course, it's the likes of Tesla and Alphabet opening their books tonight, and then those U.S. companies will obviously dominate talk on the floor here in Europe as well. Meanwhile, the German industry is warning that U.S. tariffs and the ongoing trade troubles are weighing heavily not only on their books, but also on their investment value, with ever more companies moving investment to the U.S. and out of Germany, which is a problem here for the economy.
Talking about, trade with the U.S., there's just been another attack by President Trump. This time is against German healthcare system. What exactly is this about?
Yeah, indeed, Ladi. Trump is attacking the German healthcare system, even though the healthcare system is nationally organized and usually doesn't touch on trade or other international topics. However, the U.S. government accuses German health insurance funds of paying lower prices for medications than American insurers do. And that is true, by the way. German health insurance funds negotiate volume discounts, of course, just like anyone would do in a free market. And this is indeed common practice in countries with state-run healthcare systems, but it runs counter to an important goal, and indeed one of President Trump's campaign promises, because he has often said that he wants U.S. patients to pay the lowest prices for pharmaceuticals anywhere, and now he's asking German patients and insurance funds to pay higher prices to make it happen.
Well, it seems pretty difficult getting on President Trump's good side, but how is Brussels viewing this latest dispute?
Well, at the European Commission, they view this as extremely serious, not least because Trump is once again trying to move the goalposts here. Just the fact that the U.S. government has launched an investigation into German health insurance funds is seen as quite outrageous, and a Commission spokesman says that, quote, the organization and financing of healthcare systems, including decisions on pricing, fall within the competence of EU member states. And indeed, healthcare is a domestic topic in any country around the world, and thus the EU says it's standing in solidarity with its member states. Now, facing, of course, another threat of punitive tariffs there from Trump, Brussels has asked Washington to adhere unreservedly to the commitments that his own government made in this recent trade deal with the EU, and that includes tariffs no higher than 15% as they currently stand.
So what's next now? How is the EU trying to get out of this next chapter of trade troubles?
Well, mostly by trying to placate Trump. Brussels says they're in close contact with the German authorities, looking into everything. At the same time, the Commission has indeed discussed asking German pharmaceutical companies to offer drugs at maybe even lower prices in the U.S. so that Trump could frame this as a success for his policies, arguing that his administration had indeed secured lower drug prices for American patients. They're also considering encouraging companies to make additional investments maybe in the United States. For months, the U.S. government has been urging international corporations to shift more of their production to the U.S. So Brussels, as well as Berlin, are trying to accommodate Trump, of course, without changing the healthcare system here.
All right. Thank you so much, Lars. Definitely so much to watch here for most investors. Thank you.
Indeed. Thank you, Ladi.
All right, let's get a check on what's playing out in the crypto market. It's red on the screen right there for this trading day. We see Ethereum is trying to get back to that $2,000 level, was lost that. Now Bitcoin 65,698. We see a couple of red spots there, and stable coins also, getting the green, showing that investors are trying to run into stability. Some of the headlines of the market now, we see U.S. Department of Justice has filed a forfeiture action against more than $25 million. That's in seized funds at this point. So we'll keep a tracking that. Mostly fraud networks now. We seize most of these cryptocurrencies linked to 5 international fraud investigations. Authorities allege the recovered funds passed through laundering networks that received thousands of victims they deceived thousands of victims with fake cryptocurrency investment opportunities. We see federal prosecutors have announced that the investigations were led by the U.S. Secret Service Washington field office through its cyber fraud task force. Also, hot there, we see South Korea's cryptocurrency market is showing signs of a sharp slowdown, with trading activity on the country's 5 largest digital asset exchanges plunging 89% from a year earlier. Average daily trading volume has fallen to about $305 million, highlighting a significant decline in retail investor participation. Then we see Kraken, the parent company there, they're expanding X stocks to Hong Kong, UK, and South Korea. They're trying to get more customers right there. All right, so that's how our major markets are looking today. Definitely will give you the Thursday trade. Tomorrow, maybe some de-escalation. That's it on Business Incorporated today. I'm Ladi Williams. Remain a team right here at Channels HQ. Bye for now.